Welcome back. Let's get chatting about the markets. Nilesh Shetty, portfolio manager at Quantum Advisors, is with us on the show. Nilesh, first just wanted to get your quick comments in on the two big stocks of the morning. One is Infosys and the other one is Bajaj Auto. Where do you stand? And, the kind of reaction that we've seen. Infi, bad numbers, but the stock is recovering. Bajaj Auto's good numbers, but the stock is slipped.
Generally, I will not be able to comment on individual stocks, but the IT sector is a sector where, it's not participated in the rally at all last 1 year. Generally, valuations have come off, and it may be getting to a zone where value investors like us might think of increasing weight there. Still not there, but the numbers are not a surprise. The managements have always indicated that the demand environment currently remains weak, but at some point you expect some traction in the numbers, and at some point when valuations look like they are attractive enough, value investors like us will start adding weight there. Consumer discretionary, last 2 years has been phenomenal for them. They've had very strong rally in the markets, and valuations are getting expensive. The correction just could be a sell on news kind of correction where people have anticipated strong results and are booking profits there. But otherwise, getting value in the consumer discretionary space, especially two-wheelers, is not easy right now. They are getting to a zone where they're expensive.
But Nilesh, I wanted to ask you specifically about ICICI Securities. I know you don't talk about specific stocks, but there has been some mutual fund activity in the month of March when it comes to buying within this counter, especially when it comes to now that it's going to be delisted and it's a subsequent merger with ICICI Bank. What are your thoughts there? What is happening within this this merger process, and if you can share your thoughts on the larger private banks as well?
Yeah, so on ICICI Securities, it is a portfolio stock for us as well as for 100% subsidiary Quantum Mutual Fund. Now, the entire merger process is actually a alarm in the sense that minority investors were completely sidelined. And it sets a very bad precedent. As long as a majority shareholder gets proxy advisors on their side, who may not necessarily be 100% independent in this case, where they may have business links with the group companies, including some of the asset management subsidiaries. As long as they say that the merger is fine, institutions will stop thinking whether the substance of the transaction makes sense and just go with it. So if you see the merger voting process, most of the institutions have just copy-pasted the suggestion given by the proxy voters without any independent application of thought. Just the rough cut numbers that suggest, so the mid-cap index trades at 28 times. ICICI Securities peers trade at an average of 34 times. Based on the bumper results that it is announced yesterday, just on the trading numbers, this company is now trading at 13 times trailing earnings in a bull market. And if you do rough cut numbers, the transfer of wealth from the minority shareholders to the major shareholder, in this case, is in the region of 2,000 crores to 8,000 crores. And the regulator has been completely silent. And it sets a very dangerous precedent where as long as a majority shareholder is able to influence proxy voters and get the proxy voters to say this transaction is fine, all the institutions who are meant to be fiduciaries of their unit holders will stop thinking and just go with the proxy advice. That is where the big concern is. I'm hoping at some point the regulators step in and ask the entire process to be redone. I will be surprised if the proxy voters again come back with the same recommendation, given how apparent the undervaluation is. But it is a big shame that the minority investors have been completely duped by all the stakeholders, the independent board members of ICICI Securities, the proxy voter advisory in this case, who may not be 100% independent.
So Nilesh, you're saying that the potential loss is to the tune of 2,000 crore rupees for ICICI Securities, right? That's the value which is being transferred to ICICI Bank.
Minimum, because if you just take the lowest peer valuation, and you apply that to the trading EPS multiple, that is the lowest. You take the average, the number will just multiply. It could be 3x or 4x of that.
So have you brought this up with the regulator?
So the subsidiary, 100% subsidiary in this case, Quantum Mutual Fund, has written to the board, to the management of ICICI Securities. We have written to the regulator as well. I expect at some point, some institutional investors, including our subsidiary, may take legal action against this entire transaction.
Has there no response from either ICICI Bank or the regulator to the letter that you've written?
I don't think they have responded as yet. At least I don't think our subsidiary has told us that there's been a response.
Right. What about metals then, Nilesh? The metals have been outperformers over the last month or so, considering the rise in commodity prices all across the globe, be it aluminum, copper, zinc, coal, all of them are at multi-month highs. Do you still consider metals a tactical play, if at all? Or is there some value, or is the cycle finally turning for a lot of these metals? And if that is so, whether it is the ferrous or the non-ferrous side, which side are you on?
The entire commodity space and metals in general, you want to buy that bucket when you think others are very, very pessimistic, and you want to buy companies where you think the balance sheet can handle a downturn. When metal prices are rising and a lot of the good news is factored, that is the wrong time to enter the metal space. So for us, over the last sort of 6 months, we've been actually trimming our metal position because valuations are now factoring an upturn, and the margin of safety is lower in this space. But this probably would be a wrong time to add into the metal space.
Okay. What else, have you looked at? What is the opportunity that's emerging in the last few weeks?
The most apparent opportunity remains private sector banks. The entire market rally has happened without them participating. At some point, I'm assuming corporate capex cycle will pick up and corporate credit will pick up, which is when these stocks will start rallying. But at the most, the biggest opportunity set remains private sector banks.
Private sector banks. But what about pharma then, Nilesh? A lot of these stocks were rank outperformers during the COVID times, but now they are seeing a bit of a reversion to mean. There have been a lot of stars during the COVID times that are not doing well today, say the likes of Laurus and Gland Pharma and all of these kind of names. I know you won't talk specific stocks there, but pharma in itself is such a wide basket, right? Every stock has its own speciality. What is it within the pharma space that you like, if at all you do?
Yeah, we've had positions in the larger names. We've not gone lower in the ranking in the mid-cap pharma space where there could be opportunities. But once generic pricing in the US sort of stabilized, you saw a big rally over the last 1 year in some of our pharma names, especially in the larger cap names. So we've actually trimmed our position there. We don't see much value at the moment in that bucket.
Pleasure speaking to you as always, Nilesh. Thanks a lot for joining in and sharing your views on the markets and on specific sectors as well. That was Nilesh Shetty there of Quantum Advisors. Time for a short break, though. The Nifty is back above the 21,900 mark. We'll get you more on the markets and specific stocks on the other side. Stay tuned. We'll be right back.